Hi folks, this is Scott Broberg, President of SBR Financial Group, and we're continuing on with our educational series on the federal tax system. On the previous video, we got into this idea of progressive, marginal, the rate structured system that we have, the tax brackets. So if you didn't watch that video, go back and watch part 1 on progressive and marginal. And we noted in that video, we did one example where person A had a taxable income, which taxable income is generally going to be you take your gross, you have any deductions, exemptions, and maybe you've contributed to an IRA, and you end up with some dollar amount that is going to be taxable. That falls into some tax bracket, but we noted that you pay the tax rate for a certain amount, then you go up to the next tax rate, that's progressive, and only it's those dollars in between those brackets that gets charged that particular rate. So we noted that at $60,000, the person ended up paying a tax of $10,855. That's right here. So now what we want to do though is make a comparison to this person A, and we're going to do that with, in a fit of creativity, person B. But this time we're going to say that person B makes double what person A does. So we're going to put their income at $120,000. Still a single person. I have this over here as single. It does make a difference. These brackets, the percentages are the same percentages, but these dollar amounts differ when you move from single to head of household to married. So just be aware that it doesn't exactly fall out the same for all situations. And if you're married, it will be different, but just realize that the concept is exactly the same. So let's say this person has their column of income. Let's say, try to draw this as straight as I can. $120,000, which is exactly 2 times person A, okay? So we start right where person A did. We go to this dollar amount and we say, okay, well, it's the same exact for them. For the first $9,075, you pay 10%. So that's $907.5 for that amount. Then we go up to $36,900. And we say, okay, for that, the next $27,000, $27,825, $27,825. We're going to multiply that by 15% now instead. And we're going to come up with $4,173. Now, though, we're going to go all the way to the top of that 25% bracket. Okay? Coming all the way to the top of this gives us a number of $52,450 times 25%. Okay, so that gives us a taxable, or a tax of $13,112.5. Okay, and let me move all these out here. Just 907.5. You have 4173. This number out here, 13,112.5. And then we go to the 28% bracket. So we notice that you don't go all the way to the top of that. It's only a certain portion of that is going to be taxed at 28%. In this case, it's another $30,650, which we now multiply by 28%, and that comes up with $8,582. Move that over here, 8,582. And now we're going to add up all of these numbers here, and what we come up with is a grand total of $26,775. Okay? So now, this is really what I want to get to, is we notice that 60 to 120 is 2 times income, right? So we know that it's 2 times income. But because we have a progressive system, meaning more of the next doubled amount was at 25% and 28%, what we end up getting is, if you divide 26,775 divided by 10,855, we ended up with 2.46, almost 2.5 times the tax. So someone makes double the income, but they pay 2.4 times in tax. So if you want to do that math again, take 26,775. How many times does 10,855 go into there? 2.46. Now, the further you go up, if you tripled your income and we were at the 186,350, it almost comes out to be 4 times the tax rather than what you would think 3 times. So this is what a progressive system does. Is a progressive system is very fair to the people at the lower end who are making lower dollar amounts, because as you make more, you end up paying. You can double your income, but you end up paying more than 2 times the amount of tax because of this progressive system. It's really important to understand is it's actually like an exponential chart. Very important to recognize that the wealthy in our country are paying the majority of the taxes because of this system. And you would say, well, okay, rightly so, because if the standard of living in America is somewhere around $50,000 and you're making $1 million, well, that's a lot of 50,000s that go into that million, and you can afford a lot of extras that someone making 50,000 can't. So if everybody buys at the same grocery store, puts the same gas in their car, pays the same, well, maybe not the same electricity bill because you might have a bigger house, but essentially, you know what I mean, for the cost of living of an area, but they have an much larger income, well, they pay more in taxes than do the lower side. So be sure that whenever you get into these discussions with somebody, with a friend or a family member, just make sure that you understand what this system is and pull out this video if you need to help them understand what happens as the progressive and marginal tax system goes into place. Okay, for more videos on the federal tax system, check out all our videos at our YouTube page for SBR Financial Group. For more information about your personal finances, make sure you go to sbrfinancialgroup.com. All right, we'll see you next time on the video.